Hello and welcome to another update video about Bitcoin. Certainly a more interesting weekend, even though today there is not too much movement. So we might really be in this fourth wave that we've been talking about for a few days now. You know, this green wave 4, which I think is still here part of the roadmap, which the market should get. But I needed to see first get into this green support area, which I already explained to you in the previous video. That is the area that we should see the price get into. If we hold this high at 21,300, then it should, in an ideal world, if this count is correct, get into this region, find support between 18.8k and 20.1k broadly. However, if we go below 18.8k, then we probably have a situation where this whole thing could break down, and that might provide a short setup because the count then fails. However, if you trade this as a short, I would be careful, because then you are not trading a pullback. You're basically trading a breakout to the downside, which means you're quite far away from critical support levels. That's sort of my thoughts around this. I have again, just let's just talk about the imminent price structure, then talk about the higher level one as well. I am still looking here at a, disregard the yellow count for a moment. The green count still suggests to me that this could be an A, B, C pattern. The C wave consists of 5 waves. And at the moment, I see only 3. So I see only a 1, 2, 3. In an ideal world, I would also get 4 and a 5. This, however, forms only an ABC structure. Yeah, it's not yet a complete 5-wave move to the upside of the November lows. Therefore, this move in itself does not suggest, and not in any way suggest, based on the technicals, that the bear market low is in. Few people ask me, what do I mean when I say the bear market low is in? It simply means that we will not come down anymore to the lows of November, yeah, and that the low of the bear market has already been made, which basically means we're back in a bull run. I don't see. There is early evidence. Yeah, we talked about that in the previous video. We broke above the 200-day moving average. We have seen a 2-week MACD crossover. And I'm sure everybody who dollar cost averaged in recent months, there was enough time for it, is a happy person. But I also need to make sure that you understand the other perspective, which is my responsibility and which provides a very high or a very good perspective on the risk that we still see at the moment, which is that we still follow my expectation that we will still see another low. I mean, in terms of expectation, it is very much possible that we still see it. Let's say it like that, yeah. The whole structure since June just is screaming for another low, yeah. So that's certainly important to understand. Just because we have seen 3 waves up, it doesn't confirm anything yet. What we need to see the bear market low, and I have now illustrated it on this chart, to confirm a bear market low: wave 1 up, wave 2 down, wave 3 up. That's basically our ABC. Yeah. So until we see 3 waves, this could just be an ABC. However, if we put this wave 4 in and a 5th wave, that's the very first, very strong confirmation or indication that the low is in. But we won't know until we come down here and hold support in wave 2. That should actually come down a bit lower. Yeah. So it is always these steps of validation that you need to go through. 5 waves up, 3 waves down. Only that will change the daily trend. And then that is not really confirmation. Confirmation will only happen if we break above this wave 1 high as well. Now, I'm not suggesting anybody should wait for that necessarily, but certainly the pullback of the wave 2 might provide a great entry point, and this one here. Yeah. So this is just another explanation what is actually needed from an Elliott Wave point of view to confirm that the bear market low is in. Until then, we only see 3 waves up, which could very much be a corrective price structure. And I know a lot of people have difficulties to see that this could still break down. And I'm not saying we couldn't be back in the bull run. In fact, I'm outlining that there is a possibility, because we've got the 2-week bullish MACD crossover. We are over the 200-day moving average. But there is just zero evidence yet, right? There is, early indications, maybe very early evidence, but that's not enough to call out that the bear market low is in. I still very much want to make you aware of the risk that we still have, which is that this will simply break down again after we see the 3 waves, because bear in mind a lot of people will have entered on leverage here, and again, it can go both ways. It can go up, it can go down, but the expectation here, or the, let's say the benefit of the Elliott waves and the benefit of any technical analysis really, is to show you where is the risk. And at the moment, to enter a trade, the risk will be quite low in this area. Yeah, this wave 4, this would be the next setup. And if this holds, we might have another entry area here if wave 4 support holds, and then we have another entry area here. It all depends on your strategy, right? If you trade breakouts, you might have different view and a different strategy. But yeah, of course, nobody has a crystal ball here. Nobody's trying to crystal ball here. It's all about low risk, high reward setups. And the Elliott wave simply tell us what we need to see in the market to confirm that a bear market low is in. Now, that doesn't mean you need to wait with a trade until you see that confirmation. You can, of course, trade based on your assumptions, yeah, and based on trade setups, which is all I'm providing here, right? Plus, when I see the evidence, I will make you aware. Okay, but until then, this could still very much easily break down. And if the green support area fails, I mean, these support areas, don't treat them as something religious, which is definitely going to hold. They are simply areas that need to hold in order to get a new have a high probability setup for the upside in a wave 5 in this case. If they break, that might even provide a short trade setup. Yeah. So this is sort of the way to think about it. I know there's a lot of people coming new into the market. A lot of people don't know how technical analysis works. A lot of people can't read markets, can't read structures. A lot of people think there is a crystal ball. A lot of people think these waves need to hold. A lot of people think I can will the market to do anything. I can't. We are reading the market. We are trying to understand the market structure, the market behavior, provide low risk, high reward entry points, but nobody has a crystal ball. Nobody can predict the future. Nobody's trying to predict the future, even though it sometimes might seem like that. And I know our language doesn't really help with that, because also I sometimes say I expect it to do this, whereas I should probably say if I see this, then that I'm looking for it to do that or something like that. But yeah, it's what it is. Just understand this, please. And this is what we need to see to confirm that the bear market low is in. But also, in terms of FOMO, be careful. There is no reason to FOMO. If the bull run has started, we're probably going to go to 6 digits anyway. So we are still so early. But yeah, this is what we need to see. I'm looking forward to seeing that. I don't think we are there yet personally. But yeah, this is what the market needs to show us to confirm that. Now, if we push any higher here in the C wave to the upside, then of course this diagonal needs to be reworked. And in fact, the diagonal will become invalid. All this will be, especially if we push above this wave 2 high here, when we haven't done it yet. So that's why I still have the wave 4 here. Yeah, but we haven't pushed above it. I do expect that we will break above it, 21,450. If that happens, this count is obviously invalid, and but all it becomes then, until we see the 5 waves, is a larger wave 4. Okay. And then it could become some kind of a triangle. We'll need to see how the structure is looking then. But there is, again, we haven't even taken out the 25K. So that could all just be a wave 4. So, and in the very short term, not much change to the previous video. Yeah, I'm still looking for a price move into this green support area. I would then take a trade, not Bitcoin, but Ethereum. A long trade with a stop loss below the area, and then looking for the wave 5 to go a bit higher. This is a smaller position size because all I'm trading here is really the wave 5, which may be short. And again, key resistance is here the wave 2 high at 21.5K. Getting above that could take us to the next resistance at around 22.8. But yeah, that's sort of my view on Bitcoin. I hope you liked the update. Hope that cleared some things up about, first of all, Elliott waves, how to understand technical analysis, and how to what we need to look for to understand that the bear market low is in. Okay, thanks a lot for watching. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. Please also follow us on Instagram and Twitter. You can find the links in the video description. And other than that, have a great day and see you in the next video. Bye bye.